After a challenging start to the quarter, markets rebounded significantly. US led the market recovery at 4.2%, which in turn boosted global equity markets higher with a 2.6% gain. The dominance of AI-driven stocks was evident, with the US semiconductor index surging 22% in the second quarter and 70% year to date. Nvidia briefly became world's largest company by market cap, underscoring the extraordinary influence of AI-driven mega-cap tech stocks, which now make up nearly 30% of the S&P 500. Other global markets showed mixed results, Japan consolidating after a surge in the first quarter. Europe remained flat due to weak growth prospects and political concerns in France, and the UK continued its recovery with a 3.5% gain. Emerging markets were lifted by a bounce back in China despite significant headwinds, leading to a 7.1% rise in the MSCI China index and a 5% gain in the Global Emerging Markets Index in quarter two. Bonds were flat for the quarter, with the US Treasuries returning 0.1% and small negative returns in UK, Europe, and Japan. The broad market themes in the second quarter impacted the performance of the Momentum Global Managed Solutions range, with the more aggressive funds faring better on absolute basis due to their relatively higher allocation to global equities, which continued to dominate asset class returns. In general, our asset allocation decisions were a positive contributor across mandates, whilst our diverse manager selection continued to detract given how concentrated market returns have been. The Global Cautious Fund returned minus 0.5% for the quarter, given its 60.7% allocation to fixed income. Despite being underweight to fixed income relative to the fund's strategic asset allocation, the fixed income underperformance over the last few years has continued to weigh on the performance of the Cautious Fund. But a reminder that rising yields and decreasing prices means that increasing opportunities are ahead in the fixed income in future, which I will touch on just now. Our equity underweight was also a detractor in the portfolio. However, our gold position positively contributed in the quarter. The Global Managed Fund delivered 0.6% for the quarter, taking the 12 months return to 9% in US dollar terms. The portfolio's underweight to global equities relative to its strategic asset allocation detracted for the quarter. However, the portfolio's gold position and underweight to global fixed income contributed positively for the quarter. And finally, the Momentum Global Growth Fund delivered 1.1%, taking the 12 months return to 12.4% and achieving its return target over the 7 years recommended holding period. The fund's underweight to global equities was the biggest detractor, while the fund's underweight to global fixed income and real assets, as well as our cash position, added to returns for the quarter. We're still in a high-yielding environment and are taking advantage of decent yields on offer, with the most of the investments in the portfolio yielding more than 2.7% before taking into account the prospects of growth. Now, looking ahead, interest rates cuts are expected to be gradual due to high public debt in many developed countries. Although rate cuts are delayed, they will eventually happen. This creates opportunities to invest in long-duration bonds, especially with rising yields in the 10-year US Treasuries. In the stock market, the AI boom, strong corporate profits, and undervalued stocks offer good investment opportunities. However, risks like inflation, slow growth, debt issues, and global tensions mean that diversification remains important.